Okay, let's rock and roll. Right. Hi, everyone. Welcome to the Moving Market series, where we look at some of the biggest moves in the Singapore and Hong Kong markets, proudly brought to you by Societe Generale and InvestingNote. All right, guys. So, in this exclusive series, we will not only look at some market forecasts for the week ahead, but we also take some time to get to know some of Singapore's most notable traders, their backstory, and of course, their approach to trading. Right, I am your host, Desmond Leong, and today with me, we have one of the most popular traders on InvestingNote, Brian Halim, who also runs his popular blog 3F, which stands for Forever Financial Freedom. Right, Brian, it's great to have you. It's great to have you here with us, and thanks for taking the time to jump on this chat. Could you share with our audience a bit about yourself and what got you started in trading, along with what got you started with creating the Forever Financial Freedom blog?
Sure. First of all, thanks, Desmond, for having me in this series show. So, hi, everyone. My name is Brian. Some of you may know me as 3F. So, I've been investing for the past 13, 14 years or so. And I've been writing on my blog at 3Fs for about 12 years now. So concurrently, I started off with investing a lot in the Singapore market, writing a lot of Singapore companies, mainly in dividend investing, some of the blue chips and REITs. And over the years, then I started to kind of explore more alternatives into growth markets like US and the Hong Kong market. And then, of course, also exploring other investing methodology. So apart from not just looking at long-term fundamental investing, but also exploring some trades, some short-term, some swing trades, and things like that.
All right. Thanks for sharing with us, Brian. And I'm sure the audience will be looking forward to what you have prepared for us later, right? I think it breaks down your thought process that goes into how you pick your stocks, where you think it's going to go. But I guess most importantly, people here in Moving Market series, we are very the audience is very interested to to have a peek into the thought process, the brains that go that how you decide, which stocks you pick, right, and why you think it's a good pick, right, and where you think you'll be going, right. I've went through some of what you shared earlier and looks really, really amazing, right? So looking forward to that. Okay. But okay, before we begin today's session, or rather into our market forecast session, I'll need to begin with a quick disclaimer. Ethan. All right. Okay. Here's a quick disclaimer for today, right, guys? So, really quickly, nothing herein should be considered as investment or financial advice or any form of recommendation to purchase or sell the DLCs or other securities mentioned, right? Any past performance of DLCs or of the underlying assets is not indicative of future performance, right? Investing in DLCs or other securities carry risk, right? So please see the issuer website for further information and relevant risk. And lastly, DLCs are for specified investment products, SIP, qualified investors only. All right. So that's one of the key things that we always need to share with you guys, before we begin today's session. And as usual, with the drill by now, guys, right? So how we usually have in the Moving Market series is we always look at some of the key movers that we called from the previous weeks, right? So some of you guys will remember Dan, right? Some of you guys will remember Lin from the previous 2 weeks ago and 4 weeks ago, right? So we'll be looking at some of the calls we make then, right? How it has kind of turned out, because it sometimes it works out as quickly as you want it to. Sometimes it takes a little bit longer, but we'll be looking at some of the key calls, and then we'll be looking at some of the opportunities that we could consider, for the next 2 weeks. All right, this is a fortnightly series. So it's every 2 weeks on a Monday. We're doing a quick market wrap. Okay, so let's see. The first one I'll be sharing with you guys, right, was our call on the Hang Seng Index, right? So this was with Lin last week. So not sure if you can see it too clearly. This is a screenshot from our webinar, right? We are looking at the 22,600 level, right? So you can see that the Hang Seng Index was making a little bit of a recovery, bouncing up quite nicely, right? Our call for the Hang Seng Index 2 weeks ago was that we should be seeing a reversal below this level to drop to the 2900 or 2960 level. Okay, there's a nice bearish Ichimoku cloud, right? There's a nice overlap resistance. We do a little bit of Fibonacci magic over there, right? And of course, a nice descending resistance line. Okay, so what has happened since? So what has happened since, right? So I'm going to pull up my handy dandy chart over here. Just need to see it. There we go. Okay, so this is how it looks like now, right? So you guys who have remembered, where is my, yeah, you guys who remember, we are calling the move over here last week, 2 weeks ago, right? The 2600, 2500 level price has reversed from there. It has touched our 2960 level, exactly as where we forecasted it would drop to, and then made a little bit of a bounce. So that's the important thing with trading. You know, you when you call an entry, you know, you need to know when is a good time to potentially exit from it too, right? So you can see in this example, you know, we can see a nice little drop from here. Exactly, price actually spiked up, touches our resistance area, dropped down to our target, right? And it's a nice little trade. So if you got in on that, right, especially got in on the DLC equivalent, congratulations, right? Should have made a little bit of decent dough. All right. The next one that we're going to look at really quickly, right? If I can just pull it up over here, I think it's our. Oops, no, not this one. It's our. It was with Dan, right? Calling for the drop on Alibaba, right? So Alibaba, you notice that there was a strong descending resist channel, right? And we have this special moving average called the 90 moving average. It's not the 100, it's actually a 90 because it seems to fit price slightly nicer, right? So, you know, we're calling for price to test this resistance area, the channel, and then drop to likely the 89.20 level. Okay, Alibaba is also making a nice little recovery, but our forecast was that, you know, the view will be kind of limited, right? And it should test this area before dropping down. So what has happened since then, right? If I can just pull up my charts, right? So what has happened since then for Alibaba is quite nice, right? Let's see, let's zoom in. Oops. So price did come up, test our channel, test our resistance area, and of course test this 90 moving average, which we highlighted, right? And has since reversed pretty close to the to a target level which we highlighted, right? So you got in. It took slightly longer. Not the 2 weeks which I initially kind of hoped that it would take, right? Slightly longer, but about 4 weeks, right? 4 weeks, it kind of finally played out the move, right? So it's a pretty nice move too, right? You can get it on the DLC equivalent, you know, you should have got a pretty decent profit from it. Okay. But some of the key moves, now that we have reviewed some of the key moves we caught from 2 weeks ago, 2 weeks and 4 weeks ago, right? I'll keep you guys updated as the markets play out. We will look at some of what I think are the higher probability setups for the week ahead, right? My team, we focus a lot on the technical analysis, right? A little bit of fundamentals, but very, very heavy on the technical analysis side, right? And some of the key setups which we are looking at, one of it, Singtel. Okay. Singtel is slightly tricky, but let me just share with you this move on Singtel. Okay, without diving too much into details, this move on Singtel, what I like about Singtel on the 1 day chart is that there is firstly this nice little channel. Okay, this nice channel price. If you ask me whether price is at a good time to enter now, it's at a pretty decent price because it looks like it's testing right where the channel is testing. Right, so I just draw this little channel over here, a bullish channel. We can see that it obeys what we expect from a channel: 1 touch, 2 touch, 3 touch, 4 touch. Right, so it looks like it's on the channel support level now, which coincides, right? It coincides with a first support level. Why I'm picking this level is because price has reacted off nicely once, nicely twice, nicely 3 times, nicely 4 times, nicely 5 times. So there's a whole lot of sellers that are expecting prices to drop here. But since it broke up, right, they're now looking to kind of get out of the positions, right? So they go flat, right? Ideally, we should be seeing prices kind of push up from here towards the first resistance, right? I won't explain too much into the Fibonacci, right? It can be quite confusing, right? But we should be ideally seeing prices inch up to the first resistance at 2.67. Price is right at that level now, so it's a little bit scary. It looks like it might be breaking the channel a bit, but this major support level should give us enough breathing space to see price kind of inch up to there. Okay, so this is one of the nice ones I'm looking at for Singtel. And the next one, I'm going to share with you guys really quickly. which we can. So for Singtel, I forgot to share with you guys, right? What you want to do is always to head over to if you want to go into a leverage trade on Singtel, right? You want to go into dlc.socgen.com, right? Over here under the underlying, you can type in Singtel, and you can see over here Singtel.si. All right, click search. And you can see it's a 5 times long or 5 times short. So in this move over here, right, if you're expecting prices to bounce, man, I really hope in the next few hours it really bounces, right? But the next, if you're expecting prices to bounce, right, you can consider the 5 times long, which is a DBYW, right? So you can either buy if you want to go long, 5 times leverage, right? This is the DLC equivalent you can consider. You buy it and once it hits its target, you can sell it off, right? If you want to go short, right, if you want to go short, a common misconception, right? A common misconception is that you would then sell the 5 times long, which is not true, because how the DLCs work is that you have a daily long and a daily long and a daily short. So you want to go long, you buy this. You want to go short, you buy this. Okay, it's like buying a call and a put option. Okay, it functions very similarly. Okay. So this is the Singtel one, which we can definitely consider, right? And the other one, which we are looking pretty closely, is the CNOOC, right? CNOOC is actually on a slightly longer term basis for you guys. Okay, I'm going to look at the weekly chart for this, and the important thing about this CNOOC, why I like it so much, is I'm going to draw a couple of levels here. The first one is that there's this major level that has been broken. Okay, there's this major level that has been broken, right? So previously, you can see price reacted, right? Price bounce, price bounce, price bounce, price reacted, and it has finally broken this level. So it's a key, this is what you call overlap resistance, right, in the world of technical analysis. So it's finally broken that level along with this kind of big area over here. Okay, so we should be ideally seeing prices kind of inch up a bit from here, right? Inch up a bit. What gives me even more confidence, right, is that there is this descending resistance line, which was holding prices down very nicely, right? And you can see that it has actually broken up from it, right? Price was previously, reacting, right? And then reacting one more time over here, right? And it's finally broken out. So it broke out of two, right? It broke out of this, and it broke out of this. Okay, so these two things, when it breaks out these two things, right, it gives us confidence that we should be seeing a little bit of bullish momentum. You throw in the Ichimoku cloud, you can see that, it has finally crossed over the cloud over here, starting to go up. And I think it's the 200 moving average. Yeah, you can see, right, the 200 moving average that we're looking over here, price has crossed the 200 moving average over here, right? So you got a couple of things lining up very, very nicely. You have a couple of things lining up very, very nicely for this particular trade. I wouldn't be too confident of playing it too far out. Okay, for this one, right, the reason we need to take note of the bigger descending resistance, right? So we're not going to play this to the moon and stuff, right? Just going to play it to the next key level, right? There's a nice gap over here which I think price is going to fill, right? And if I do a retracement and zoom in, right, it kind of lines up with the 78.6 retracement. I won't dive too much into why we use these levels, but we should minimally be kind of seeing price inch up to the 12.60 level, right? That is one of the key levels which we're hoping that price would reach. Okay, so again, you're going to find it on the DLC equivalent, right? Just search for CNOOC on dlc.socgen, right? You want to really go 5 times long on it, right? Daily long. Between the two, right? You just keep a watch out on the CNOOC 5 times long. All right. To watch out. Otherwise, long-term position, especially because you're holding for a slightly longer term position, right? It's likely this, remember, is a weekly chart, right? You're going to hold for maybe 1 or 2 weeks, 3 or maybe even 3 weeks to a month, right? You could take a position trade into here and look to play the move up to here. Okay. Anyway, let's see how it turns out over the next few weeks. This is one of my longer term calls, which are looking at. Okay. But that should more or less kind of cover it for me, right? Some of the key things that I'm looking at. What I want to take the time now to do is to hand over our time to Brian, right, who will be sharing with us some of the key moves that he's looking at, right? He has prepared some really amazing slides. I went through them myself, right? And he'll be sharing with us, how he got it, what goes into him deciding about these setups. And yeah, over to you, Brian.
Okay, thanks, Desmond. Yeah, so I'll just quickly go through my slides. Next, please. Yeah, so I've done the introduction earlier, so I guess I'll just skip this slide as well. Yeah, so like I introduced earlier, so my investing style, I look at both sides, both from a long-term perspective as well as a sub-technical short-term perspective, which I will show in my next slide. So these are some examples which I made in terms of the more kind of short-term related, right? So I also posted this on my blog in February, March this year, with regards to my course on Netflix as well as C Limited. So I found that back then all the growth companies were having quite a bit of pressure from all the macroeconomic conditions, but also technical wise, I think quite a bit of these companies have been on a downtrend since the start of the year. So I kind of took the opportunity to kind of short these two targets. Yeah, and these are not the only two. Obviously, a lot of growth companies today are facing that sort of pressure that we see in a lot of growth companies. Okay, next, please. So just quickly sharing some of the top few positions. Some of you may know that this I also posted this on my blog. These are my top 4 positions at the moment. For the purpose of this series, I'm just going to talk a little bit more on Tencent, right? Because I think the rest of the others have been covered from Desmond as well as some others. Okay, so not going much into the detail in terms of Tencent. Most of you would have known Tencent is a big conglomerate in the China internet industry. So next slide. So some of its core companies, core engine, as you know, they have the entire WeChat ecosystem as well as that communication as well as media and gaming engine, right? Next, but what is also very impressive about this company long term is it is also an investment engine. So as you can see that if you look at the right hand side, right, which is very visual, they have been invested in a lot of companies that we may have been using ourselves or heard of. So Tencent is not just a company itself, but it is, you can treat it as part of like a VC's type of companies where they put their money into a growing industry players as well. Okay, next. This is a very recent news which is being shown last week actually. As most of you know, China have been going through a lot of regulatory since the past 1 to 2 years. It has a lot of so earlier I think the China government put on a game freeze where it kind of suspend or stop licensing from a lot of gaming companies. And then within 6 to 9 months, just last week, they actually approved the first titles back in terms of licensing for gaming companies. So obviously, a lot of news with regards to regulatory, even until today, keep coming in and out. And I think the government is just trying to, kind of just put a halt to it and try to ensure that the companies do comply with the regulations and how they can make the industry better in the future. Okay, next. Okay, so won't go through this again in detail. So I look at both fundamental and technical. So the next 3 slides is basically what I usually did for much more longer term holdings. I did a base, worst, and best case scenario in terms of a particular company, not just Tencent. But anyway, this is what I did for Tencent. So how this was being done is using the DCF calculation, as well as adding any investment value which Tencent has, right? So in terms of the base case scenario, as you can see in the highlighted there, I use a 20% growth over the next 2 years and a 15% growth over the next 3 years. Simply with that, we came up with a so-called intrinsic value for Tencent at $551. And if you look at the next slide, it will be okay, this is the best case scenario. So the best case scenario, even at 20% over the next 5 years, is quite rather not as optimistic as it is, right? So I was trying to put in a case where it's something which is definitely achievable by them. Tencent has done this multiple times in the past. The regulatory has put them quite a bit of hold to it. But I think once this is done and dusted, I think Tencent can resume back its growth again. So with this best case scenario, you can see that the intrinsic value suddenly goes up to $627. And next slide, even in the worst case scenario, where I've put in a kind of just put it down a little, 15% of the next 2 years and then 10%, you can still see that the intrinsic value still is at the $433, right? So I think this worst case scenario is quite conservative in my opinion. Even China, as an overall country itself, is projecting a 5 to 6% GDP on itself. Right? So, by organic, if you think about it, most companies in China would have, on average, achieved 6 to 7% on its own. And if the company is you have a moat in the company and is a leader in the industry, they can for sure easily hit this projection. Yep. So next slide is basically just so as you know, Tencent is today I think trading at about 360 or 370 ish Hong Kong dollars. So you can see that even in the worst case scenario portion, they are still undervalued, right? So this is how I usually look at a company longer term basis. Next slide. Okay, so I also took a look at some short-term trades, right? So this is the daily chart for Tencent. You see across, you can clearly see that the company peaked in January or February of last year, and then since then, with all the regulatory news surrounding China, most Chinese companies have been on a downtrend, right? If I just zoom this down in the next slide, a much shorter term frame, uh, you can actually see some opportunity. You can see that the top chart there, that the company has actually been consolidating, right, all the way from 6 months from August last year to today. The company has not been able to so-called break out of that channel. So the company has been consolidating. You can see that it has hit the resistance line 3 to 4 times. It has also hit that support like 2 to 3 times within the past 6 months. So how I usually play into this trade is just looking at that consolidated trend line. I will usually add on to my positions at the bottom at the support level, and usually at the resistance level. I mean, depending on how you're playing this trade, whether short term or long term, you can either sell this, or you can basically not at least not add into the position at that resistance lines, right? So usually how I play consolidation is usually, the longer the consolidation, the more likely it is going to break out, right? Either to the top side or the downside. So I see Tencent, in my opinion, as a very good long-term holding. So it is definitely something which I want to be holding longer term. And using this short-term technical analysis, I have been, and I want to keep accumulating and adding these shares at the support level somewhere in between like 360 to 36 to 370. Okay, next slide. Yeah, so this is just a very general macro on China, right? I think a lot of people are concerned with China regulations, especially for those who have been investing just in the last a year or two. I just wanted to highlight this, where China has been regulating all years long in the past decade. So if you look across, even at the starting from the top to right now, the company have been regulating, back in 2020 to 2012, with regard to the corruption. That was a big thing. Then they had also made some regulatory calls on education, some gaming license suspension as well in 2018, some health and medical drugs reform, antitrust regulatory on the internet industry right now, and so on and so forth. right? So if you see the next slide, yeah, you can see here it's quite self-explanatory. A lot of the regulatory industries which have gone through in the past have been on the downtrend, but immediately over the next few years, right after that regulatory was concluded, you can see all the industries that have been regulated moves all the way upwards, right? So the trend changes, and suddenly the entire industry itself is on a better foot holding. So yeah, so I think for me personally, I do see this regulatory as a short-term pain, but longer term wise, I think it will benefit the company and as well as the whole industry, the entire China GDP as a whole. Okay, next. Yeah, so this is a China valuation. Just quickly pulling out where it kind of really sits in terms of all the emerging and market, right? The mature markets. You can see that China is very cheap. I mean, you can get cheaper if you buy into countries like Russia. Of course, Russia itself is having a war, right? But I guess if you feel that is too much of volatility or fear, yeah, a lot of the so-called deep value play right now is in these industries, right? The US, you can see, is very outlier on the one side at the right hand top. A lot of people have gone into the US market over the past 2-3 years. I think the US market has been like really booming on a very strong bull run. But as you all know, the macroeconomic conditions have changed, especially starting this year, where interest rate have rises, the QE have kind of have halted a while. So it remains to be seen whether US stocks still can price in that part of the valuation in terms of ROE going forward over the next few years. Yeah, so just a quick summary from my side. We will always see bad news and good news, right? No matter like what the events is, we will always have both bad news and good news going on, right? So I think early on, already demonstrated from the fact that sometimes the government or hold gaming license, for example. Then over the next few months, the government kind of reapprove it, right? So it's something which I think is short term in nature. If you are a slightly longer term player, I think there's really nothing to be like too worried of, especially if you're buying into good companies, you are averaging down, and you have plans in place, right? Then I would recommend you to look deeper on the longer time frame. What is also important, I think, is also if you are both like me, like if you're both into both long-term plays and short-term plays, you want to have plans, you want to have different plans for these two types of different plays, right? So the goal is not to make sure your long-term holding does not become your short-term trade because of fear and volatility, and your short-term trades, you want to make sure it does not become long-term holding just because you don't have a stop loss in place, for example, right? So you want to make sure that you kind of plan your investment versus trade well, and you can kind of segregate these two investing method per se. A lot of other case studies in the past, right, which I kind of recommend many people to take a look, even from China itself, during the dairy milk scandal or during the corruption, where a lot of luxury watches and brand goods over there, they suffered similar fate to what the China internet industry is suffering today. But take a look at where they are today, right? And you can see that the luxury goods in China and Hong Kong, they are almost at the kind of a very, very all-time high, right? So that's how the regulations can actually benefit the industry. Not just, of course, from regulatory moves, but also if you look at past cases like Apple, Amazon, Netflix, all these are great companies which today, like Apple, for example, is at all-time high today. But actually, not many people know that across 5 to 6 years, I think from 2011 to 2017, they were actually more range bound. They were trading at a very cheap price to earnings, and back then not many people were very convinced of Apple's valuation and how the entire industry is gonna take over after Steve Jobs left, right? Similar like Amazon, Netflix, and other companies, it started off very a lot of volatility, a lot of uncertainty in the entire sector. But through through hard work, management, good management, and all these things, they deserve what they are today. So yeah. So last but not least, a lot of noises out there in the market. Just make sure that I think we have a plan in place where we can, where we make sure that we know how to handle when uncertainty comes. Yeah.
All right. Thanks so much for sharing, Brian. Well, I was just very intrigued by your approach. I like the balance that you have using fundamentals to do a long-term valuation of a company, right? Even the worst and base and best case scenario, right? And then you use technicals to look for the short-term kind of setups, right? So, but I was just wondering, right? So if I'm a trader, I'm looking at Tencent now, right? I think you mentioned it's about a 366 level,
Yeah.
right? And let's just say I want to get in on the I believe in the long term valuation of it, right? How would you yourself kind of look to kind of scale in on this position, right? What are the key technical kind of levels that you'll be looking at, or considerations you will have when you decide, like, okay, maybe this might be a good time to signal that the first recovery might be happening, right? Like, how will you go about doing that?
Yeah, for me, from a short term from a technical perspective, I usually do it quite simple. Like I usually just use the Fibonacci as well as the moving average EMA. So I
Okay.
usually use the EMA 20, 50, and 200. So obviously,
2050, yeah,
your
correct, yeah.
so obviously the 2050 is more short term in nature. And then 200 is definitely much longer term if you want to ride that uptrend, right? So for me, since I believe in the company, I usually don't mind adding more. Of course, if the company is at the top of the resistance, is at the top of the EMA, for example, I'd stop myself from buying in. Not because I don't believe in the company, but I think risk reward wise, you never know if it comes back down, right? And you get into a
True,
better
true.
position. So just very simple way of looking at things and not making it overly complicated. Yeah. So at the end of the day, all we want is just to buy in at the better price, and then try to get out at a much better price, right?
Sure, sure. Yeah, I was looking at charts. I can see that you have you usually got like four moving averages there, right? So I was wondering whether when price crosses like the 20 EMA, is that like the first confirmation for you that, okay, I can scale, maybe like get in a little bit, right? And then as it kind of breaks the next resistance level, then you're like, okay, I'm going to load up a bit, right? But you use this as like little indicators to scale in on the position, or do you usually jump in on a full position one shot?
No, I usually also try to average in a
Okay.
bit by a bit. Yeah. I think the part where I use more of the EMA as a support basis is usually on more on uptrend type of stock. Obviously, it does not
Okay.
apply to most Chinese companies today, right? Because they're
Yeah.
all on a downtrend. So
Yeah.
so most of the EMA is today acting as resistance.
Yeah.
So it's
Correct.
it's more it's more for me. The further it goes away from the EMA, right? I think we sort of saw that happen in March,
Yeah.
where a lot of Chinese companies suddenly plunged, right?
Yeah.
And
Yeah. Correct.
I just suddenly plunged all the way like capitulation, and it is so far away from the next EMA support, EMA resistance that over the next few days it just had to bounce up to that resistance level, right? So yeah, I think if you are looking to add on but feels a little bit more fearful, you can always wait until there's a lot of other indicators, but you can wait, for example, where you can wait till the EMA 20 crosses the EMA 50, and so on and so forth.
Okay.
Um,
Okay.
yeah, gonna get in at slightly higher price, but you get more comfort, I guess.
I see. I see. I like that approach, right? I guess one of the last questions I have, right? We know the valuation, right? Like using a discounted cash flow, a DCF model, right? We know roughly the valuation, right? So which can kind of more or less give us the rough kind of profit targets to look at, right? But from a stop loss perspective, I think you were emphasizing the importance, of having stop losses in place, right? If you have this longer term plays, right, how would you then consider where would be the ideal level where you just say, all right, this is not working out, and probably want to cut my losses here? How do you determine that?
For me, because I look a little bit more longer term, so a lot of stop losses are probably due to more fundamental reasons.
Okay, okay.
Yeah, more fundamental reasons. But then if I know that I'm doing a short term trade, right, on some US companies, for example, then I usually look at more at weekly candle, and usually on that weekly, by the time it kind of breaks an important support level, either EMA 50 or 100, for example, then I'll just take my loss from there.
Okay. Okay, makes sense. I guess long term. If you have long term, if you're using the fundamentals for a long term target, then technically, you should also rely on the same fundamentals for for your stop loss, right? If suddenly like Tencent drastically changes their business model, then you're
Mm.
like, okay, this is something I don't believe in anymore. Then you would kind of get out of the trade, right?
Yep, exactly.
Okay, okay. I really like your like what you shared. I'm sure the audience really like the way you balance off like the fundamentals with technicals. I think it's great. I think it takes a lot of time and effort to really dig deep into a company, right? Into its business model, right? And then what is always great is when they both align, right? Your fundamentals, shows that there's a lot of potential, and from a technical perspective, starting to show a little bit of recovery, right? A few still have quite a bit of resistance to break past, but you can use that as little bits of confirmations of like maybe to signal a broader, bigger recovery. And I think it's a very nice view, a very nice balanced approach that I have, and I can see why people love visiting a blog.
Thank you.
All right, all right. Thank you so much for sharing with us, Brian, this moving market series. Right. I also want to thank the audience, right, for staying throughout this entire series. If you have questions, comments, feedback, whether leave it in the comment section below. Ping it on Investing Note. You can find Brian on Investing Note. You can find him on his blog, Three Forever Financial Freedom, right?
Yep.
Three
Yes.
Forever Financial Freedom. You can find it there, right? You can, I think many of us watching who have watched this would probably be bookmarking his website, right? It's very, very good in-depth analysis there, right? I'll be checking out quite a bit myself too, right? And once again, thank you everyone for tuning in, right? And I'll see you guys in 2 weeks' time. Trade safe, stay safe, right? And take care, everyone. Thank you, Brian, once again.
Thank you, Desmond. Thanks, everyone.
Thank you. Bye bye.
Goodbye.